Hello everyone, welcome to Macro Cafe. This is your guest, the Cowboy, and this is Elliott Wave Cafe, another edition of the Macro Cafe episode 9. Let's go ahead and get started. We have quite a lot of things to talk about today, and let's jump on to them. Before we do, you can find me here on Telegram at Elliott Wave Cafe. There is a public chat, and there's also a premium room with a lot of good things on there. And then on Twitter, you find me at Elliott Cafe. So let's jump on and get started. Like I said, lots of things to cover, lots of stuff happens in here, and it looks like Bitcoin is breaking out, or at least it's trying to get here to new all-time highs. Actually, I've just updated all the charts into our chart room on Telegram, and one of them is this one, that it's a 1-week chart of Bitcoin. And, my comment in there was wave forward is in final stages. I think by the signs that we're getting here lately for the past, let's say, 24 hours, I think this wave 4 might be already completed, and we're on our way to make the final advance here in this wave 5 of the larger cycle, wave 3. Now, once we complete this larger cycle, wave 3, we should be getting into a corrective pattern. We have no way of knowing exactly how far this traveled. My targets for this are anywhere between 100 and 150,000. What I'm trying to do is I'm trying to copy this wave 1 that I have on here and try to measure this about 100% of that, kind of going up into those highs. So that puts us right into the 100, maybe 120,000 level for Bitcoin going forward. I've specified a little bit. If you go back and watch last week, I've done the Bitcoin and Ethereum Elliott Wave analysis, which is, I think it was already episode 19 or episode 20 that we're doing, and I dive in more details about what Bitcoin is and where we are in some of those internal counts as well. And our anticipation that was actually from the beginning of March, that March is going to be a weaker month for Bitcoin, and then going back into the first couple of weeks of April, we're going to continue to correct, and then we should be finishing this pattern and continue to move up. Based also on some of the seasonality charts that we're watching as well. So listen, if you wanted to know more about this, visit that video from last week, Bitcoin and Ethereum technical analysis, and you'll see a little bit more on there. So let's jump and take a look at the oil in here. Not a lot has happened. I think we've corrected a little bit more in oil since last time we've talked, but it's basically just kind of correcting and pulling back. That 65, 64 level was an important resistance. We've talked about that, in all our kind of macro, cafes going back, months now. And ever since we were up into these levels, we were targeting this B wave highs, acknowledging that there'll be some level of resistance in here and a possibility of oil maybe correcting, if not for the rest of the year, maybe for a few months down the road, where we're actually trying to build maybe a right shoulder in here to kind of match this corrective move. This will be your kind of neckline based on more of a traditional technical analysis, and then this will be followed by likelihood of a larger breakout in here. Now there's a lot of factors that influence oil in here, and we still have issues all over the world, with the COVID, and some of the economies are getting shut down again, and things like that. We're a bit luckier here in the United States, where a lot of people get vaccinated, so we can hopefully get back to business. But maybe this kind of tempers down a little bit, those prospects for growth across the globe. So to me, I'm still optimistic on oil and the energy markets overall. I'm cognizant of the fact that oil can correct a little bit up here, as I have it. I have it as an ABC correction, which is kind of my more conservative account, where this is just another simple corrective pattern, and we're going to push back lower in here, maybe back towards 40, who knows. And something that's more impulsive is that this is actually a wave 2 intermediate. This was a wave 1 in here, and then this is another wave 1 minor, and I go 1 2 1 2 in here, and then we're actually breaking much higher in oil. So that's what this alternate counts actually mean on there, and I'll continue to watch it. We constantly give updates in our program every single day and what's going on into some of these macro fields, and we dive in a little bit more into the internals of the oil moves, and we follow those very, very closely. Also in here you can see the 1-day chart. So this is the alternate count as a wave 2. That's the primary, that would be be the minor wave 1, with the possibility that this could be still an ABC correction. So, I think this move here is complete. This is the largest correction that we're having so far into oil in anything that we've seen from this rise, from these lows. So I have to kind of consider this possible a wave 2. And this could be just wave A of this wave 2. We could do maybe a B wave rise in here, then another C down before kind of oil stabilizes, finds a little bit of a low in here, look for some fib zones, and then break to the upside again. So I'm kind of staying on the sidelines on oil, and just kind of watch it and see what we can learn from it as this continues to develop. The next one I have here is the moving averages. I mean, just very, very simply, we're right at the 50-day moving average, so we should have a little bit of a support. The lines are converging. The 200 is down at 47. Again, if that correction continues, I would expect those levels to provide support. It's kind of in line with what we have here on the weekly as well, on the 200 week and the 21 week as well. So that's something that's going to give support on the way down. All right, let's jump over to gold. This is a 1 week chart of gold. I would love to remain bullish on gold. I think even though Bitcoin is kind of taking some of that luster, for a while now, and gold has been in a corrective move since middle of the last year. I mean, you can see in here that's right at the middle of the of the 2020, and we've come pretty good here to the downside. I mean, this corrective move, it's matching this wave 2. So if this is indeed a wave 4, we should kind of get on and up from here, because we've hit 38%. That's a standard pullback for the fourth wave, measuring it from these lows all the way back here. I do want to see a little bit more bullishness from gold before I get more excited about it, and that would be try to get me above this 1816 level, maybe a slightly higher, to get a little bit more confirmation. But you can see in terms of the time travel, right, we're using the Fib time measuring tool, and that's about 100% distance traveled as well. That's right there. So we're having a little bit of a interesting signal in here from gold, but it's not fully developed, and yet the RSI is still kind of dropping on the weekly. If we go and take a look at the daily charts, we're having a little bit of a divergence in here, which is interesting to see. So as the markets were trying to make a new low, we actually made a double bottom. The RSI stopped and we're pushing higher. So this is interesting. This is slightly encouraging, and it means that this fourth wave could be already completed. Now we want to see a 5-wave move of these lows, and only then we can get a little bit more aggressive. So I should say cautiously optimistic on the gold markets. We're still below the 200-day moving average. That's quite a distance until that we passed that at 1857. We are above the 21-day. That's an initial signal that gold it's starting to do well, but there'll be a lot of trend followers that are going to sell into the 50-day moving average, and if we survive this and climb higher, that's going to be a new signal. So again, it's not gonna this gold it's not going to rally all of a sudden. This will possibly continue to push higher, just kind of grind. The 50-day will stabilize in here, then we'll probably come back and retest that, and then slowly we'll try to develop more of a bullish pattern. So I'm patient on it. I think there's be plenty of time to jump on the wagon if gold turns bullish. Okay, let's jump over and take a look at rates. Right, this is a chart of the 10-year yield, so you can find those under the ticker TNX, and this is kind of where we are on it. It's basically, we've tried to stabilize a little bit, so we've gone as high as 175 on a 10-year yields, and this, it's probably a little bit of a resistance. We didn't quite reach the 195 level in here, but I think that would be the next target in case we continue to move. As you see in here, I have it just a simple alternate, just as a simple ABC correction, just in case markets kind of reverse from here and start to decline slightly. I know there's a lot of talk out there about inflation and about the rates rising. For right now, we've gone a lot. I mean, you've gone from 50 to almost 2% here in 50 basis points to 2% in the 10-year yields. This has been a pretty sharp rise, right? And I think it deserves a little bit of stabilizing in here, and I don't expect the full continuation higher. Even if this could be a possible third wave, this would be a 1, a 2, a 3. If it's a 3 wave, it needs to make a little bit more advance to the upside, because otherwise you would be kind of short comparing with this wave 1, right? But I do consider it you can look at the the moving averages in here. I mean, the 200 week is at a 195, right? So that's going to offer a pretty solid resistance, along with this swing highs that we have back in here. For right now, if you look at the daily moving averages, we're supported by the 21, but the market, it's kind of forming some kind of a top in here, and I think I'm assuming that the RSI is now dropping and we might correct lower. But listen, so far, as long as this holds, we can't really turn bearish on them, right? It could be just a little blip in here and we can continue to push higher. So I'll continue to watch these patterns unfold, but I do expect, even if we're pushing a little bit higher, I think that we're going to enter into a period of consolidation here for the next few months, and that should help equities overall, as they continue to push higher, right? This is the the yield curve in here, so you can see this is the you're going back 10-year minus a 2. You've gone negative in the past. That kind of precedes a recession. This is the shortest recession possibly in the US history, and this continues to move to the upside. It looks good. We have a little bit of a pullback in here, which is sort of natural, but this should help the banking, and you can see that the financial markets, the financial sector in the stock market, in the S&P 500, it does actually really, really well. So I continue to have exposure to it, and this is a good indication that the economy is starting to to move towards more positive. I think they're expecting up to 7% GDP, I think, for this first quarter. So let's take a look and see what happens. I think they're coming next week, I think, the numbers. All right, let's jump over and take a look at the break-even inflation rate. So you can see in here, these are the 10-year break-even. So this is kind of what the market is telling you, where the inflation should go. They're kind of pricing in over the next 10 years. This is at about 231 right now. So this is pretty much what what the market thinks of inflation. I think the numbers that we're getting from the data that we're getting in CPI, it's at, I think, 1.7 right now, or 1.8, and the market thinks no, we should be a little bit higher here at about 230. So this is what the yields that you're supposed to get if you want to kind of break even on your money. So far the government only pays you 1.7 for the 10-year, which means that you're actually losing money on the negative real yields on there, right? So these are the real yields in here. The negative, there's 0.6, I think, or 0.58 if I'm not mistaken. I don't have that exactly in here, but this is this is kind of the inverse relationship with the gold market, and as the gold responds really well to the real yields, you can see as they were kind of starting to rise in here a little bit, gold were continuing to drop. As they're pulling back slightly now, right, they're just kind of getting a little bit even more negative in here. Gold is starting to rally slightly. So continue to pay attention on this relationship. So you have the 10-year constant maturity rate minus the break-even inflation that I've showed you before. So the 10-year right now, it's a 1.62, 1.7, right, and then break-evens are at 233. If you subtract those, you're getting to 0.6 on to the real yields, and that's where we are. So let's continue to move forward in here to the next one that I have is the S&P 500, which is super nice and bullish. I've kind of modified the count slightly in here from considering this necessarily a fourth wave to maybe more of a bullish stance, where that's a 1, and this is actually a big expanded flat here in a wave 2 position. And we're just kind of beginning an advance here much higher. So this is a wave 1 possibly. If all we're getting here as a wave 2 is this, that means that we're going to continue to break to the upside. Now one thing to keep in mind is that we are in this super nice ascending channel, and we're attacking the top of this channel. Combine that with a couple of things that I'm going to show you. There'll be some cautionary tales in here that we could be pulling back slightly, but that's just something that that I'm just kind of keeping on the back of my mind for right now. We're breaking to new all-time highs. The price is moving higher. I don't want to fight it. I don't want to short it. I just want to be cognizant of some of these other indicators, but I do remain focused to the upside until some of these levels get taken out, and that would be 37.30, and then the massive one here at about 3,200. If we're breaking higher in here, right, you could actually start to be very, very aggressive and push higher, and that's going to be indicative of upcoming, larger third wave developing that can push this, towards, who knows, 5,000 in the S&P 500. So that's kind of where I'm seeing this traveling, and then this is just a simple moving average chart on here with the daily in here and the weekly to the left. It's as long as we stay above these, there is no other way of really looking at the markets, right? You have to break below the 20, you got to break below the 50 to start getting more of a bearish sentiment. Until then, this is a clean bull market. The RSI continues to remain above 50 in here, so we're trending. We're towards the top end of it, so that's a little bit of a, you could say, like you're getting into the overbought territory, but there's nothing here that suggests a turn. There's no divergence. There is not much happening at this moment. So it's just a clean kind of trending market that we don't want to fight in. Now, a couple of things that I do want to show you on the negative side is this is what you have here is you have the copper and gold ratio, which is up here in blue, and then you have the S&P 500, which is in black. So this copper gold ratio, it's important to watch because it tells you, how much risk actually people are taking on the market. It's a risk on indicator, as people prefer copper obviously to gold, right? Gold is more of a kind of a safe haven, I should say, and when people start to look into a defense, right, they would buy more gold, they would sell their copper. For right now, this ratio is in favor of copper, and this tells you that the markets are looking good, they're healthy. Back here in 2020, right before you had the crash, there was a big divergence between the S&P 500 and the copper gold ratio. This was kind of starting to drop, starting to signal that there is some underlying issues, and sure enough, the market massively dropped after that. I'm getting a little bit of a signal in here that the copper gold ratio is pulling back when the markets are making new highs, and I'm going to keep a close eye on this. All right, so come come into our pro room and we'll talk more about this, and we'll keep a constant eye, so you don't have to wait 2 weeks for the next update in here. But this is something that you can kind of keep an eye on your own as well. So another little blip that we have in here, it's a little bit of a difference. So if you look at the credit markets in here, you can see this is the kind of more of the corporate high yield corporate bonds, HYG, divided by TLT in here. So you're looking at the high yield market, right, more of a riskier market, and then you're looking at the TLT, which is the I think it's the 20-year treasuries or something, and that ratio now is starting to come down slightly. It's following the market in here as well. Right, and you can see the divergence too, right? When back in 2020, these were starting to drop as the market continued to make new highs, and the credit markets were telling you, hey, listen, we're gonna, there's something going on underneath the surface, and we're probably gonna hit a blip in here, and something similar it's happening here. It's still very, very premature, but you can see how the ratio is starting to drop. Where people are looking more towards the safety of the treasury bonds instead of the high yield corporate bonds. So this is making new highs. This is kind of pulling back a little bit. So I'm watching that. Going to next into the dollar, which is another kind of macro thing that we're watching. This is just a beautiful mirror chart of the dollar at the top and the euro down at the bottom, right? Just because there is just so much euro into the dollar index, it's almost a mirror image. Talked about this into our pro room as well. We were watching the 200-day moving average as being a pretty important level where markets are going to respond. They're not going to continue, to push through it like there's no tomorrow. As long as we were remaining below these levels, I think this trend remains to the downside. Right, the moving average points down. This would be a selling opportunity for the dollar to break to new lows and then move up here into the euro dollar. This count in here, this could still be a wave 4 as a part of this. Let's say this is a 1, that's a 2. In here you got a big 3, you got a 4. So you look, let's say 1, 2, 3, 4, and 5. So that's your larger third. That's your 2 in here, and then that's a 4th. Or this whole thing could be already complete, and that's a second wave, which possibly it's it's a little bit of a better interpretation. 1, 2, 3, 4, and 5, right? That's kind of our wave 1 now. 1, 2, 3, 4, and 5. That's a 2, and now we're trying to work our way higher. So this means dollar lower, euro higher, and I'm going to continue to watch for signs back in here. Of this kind of continuing in the dollar weakening. And this is, a chart of the dollar index here on it's a kind of a 2-week chart, but more with the counts. Where I'm watching this, you don't actually see that, but back here, I'm looking at this as being a wave 1 of those highs. That's being a wave 2 instead of a B, right? So this could be just a simple ABC and you're pushing higher, or it could be a wave 1 and a wave 2, and actually the dollar is breaking much, much lower in here, right? But for right now, I'm not looking that far down the road. I'm just looking for another move lower in here for a possible 5th wave, if I'm correct with this being the 4th. You could see that we've gotten a pullback from the 200-day moving average and from the 200-week moving average as well. So you kind of have to keep those in mind and kind of combine those levels with some of the counts and some of the sentiment that's out there to kind of get a little bit of a better understanding of what's happening in the dollar as well. But if we're breaking below this 89.21, things are gonna start to look very, very interesting. And look at the emerging markets as well, because they're starting to respond a little bit to this kind of dollar weakness that we're getting. Not a full-on send, but it might come. So the next one here, I just want to show you a little bit of the rotations, what's going on, overall with the rest of the assets in terms of performance. So this is, you're looking back here, for the past 10 trading days. Bitcoin remains here, in a super trending environment. It's one of the best performers here, even over the past 10 days, right? It's up about 13%. You can see back in here, right? So it's continues to outperform massively the S&P 500. It's gotten into a period of weakness in here, and that's that kind of triangle consolidation that we're having right now, that we're breaking out of. And as this kind of finishes off, we're pushing up higher here into the leading quadrant. And if we're gaining momentum, this thing could really, really rock to the upside, and these percentages will obviously change. The next one are the Qs, which have been improving, right? This is all the tech sector, and you could see that they've been actually behaving nicely here for the past couple of weeks, with the rates kind of moving sideways slightly, but we're getting into the leading quadrant here. We're up about 8.3% in the past 10 days on the Q. So that's an interesting sector to watch, and this tells you that the rates are going to pull back slightly, or the other way around. We'll see. I mean, I don't know who's wiggling who, but it's interesting what I'm seeing in here, that they're getting into the leading quadrant. So we'll see if this is going to get sustained. The dollar is moving lower in here. Gold is moving lower into the weakening quadrant. TLT is moving lower. And you can see that we're getting a little bit of a push here up into the oil, and then a little bit of a push into the emerging markets as we're rotating, out of the kind of this lagging quadrant. We're trying to push into the improving, and then see if we can get and lead and actually outperform the benchmark, which is the S&P 500. So that's just a quick, rotational look. Again, we take a look at this almost, every single day, if not every other day, into the program, and just, kind of monitor this kind of macro development overall, and see where things stand, and where you want to be, where you don't want to be, what to press the acceleration on and what to hit the brakes on, right? And for right now, Bitcoin continues to look here up into the right, so it continues to look good. Guys, I really appreciate you watching. We've hit 1,500 subscribers. This channel is getting, bigger by the day. I think we're getting a little bit more views and more subscribers. People are getting interested into this macro aspects as well. We're doing also crypto analysis. I've done just an episode, I think, a few days ago about the alts as well. So I'll probably try to do more regularly covering the alts. But again, if you want to give us a try, there's a 7-day free trial. You can come into our pro room. We have a main chart channel where I have all my charts and my, of all these kind of major coins, major altcoins that we're watching, obviously including Bitcoin, and then gold and oil, and stuff that we think it's very, very important. And those charts get updated as things change, and those are a very, very quick reference for you to just jump in and say what I'm thinking, and kind of what I look into those assets. And then there's a trade alert channel as well, where I show you what I trade, and I put the live signals in there, exactly what I do. You know, we have a stocks channel where I cover, you know, stocks, and I kind of show the moves that I do in my own portfolio up there. There's a chat room, you know, for members discussion and questions and stuff like that. And then we have a learning channel that it's kind of starting to grow, where I put, you know, count examples, what relationships, technicals, you know, I'll start to do short videos about, you know, Elliott Wave. And then also, you know, as part of your regular monthly membership, you're getting this Elliott Wave course, which is about a 7-hour detailed learning course. If you really want to dive down and learn Elliott Wave in detail, this is really, really helpful. And now it comes with the monthly subscription. You used to have to subscribe for 3 months, you know. So that's this is my kind of my slight shameless sales pitch here at the end. If you guys want to come and visit us into the pro room, I wish I could, you know, talk a lot more about, you know, everything that we do and a lot of stuff that we cover, but I just kind of, you know, keep it small and keep it private in there, so you know, my clients have access to all that. So anyway, thanks you guys for watching. Please subscribe to the channel and hit the thumbs up so we can kind of grow in the ratings. And you know, 25 minutes into it. So thank you guys for watching again, and I'll see you on the next one. Bye bye.